happened to us in March, but it's not the first time we've been in a pandemic.
No, this is the third in the last 100 years. The first one was in 1918, Spanish flu. And you had about 500 to 700,000 deaths, Jay. They didn't know what they were dealing with. They didn't
understand the virus at all.
Not at all. They did not. And it was pretty devastating, right? The next one was 1957.
Yeah, I wasn't really even aware of that. No one's talking about the fact that we had a flu pandemic in 1957 that also spurred a recession.
Yeah, so it showed up in the summer of 57, right? Over the course of that pandemic, they had recorded between 70 to 120,000 deaths. But they got a vaccine fast, didn't they?
That's right. By October, they had a similar kind of shutdown, right? Yeah. Everything shut down. People didn't go to movies and to retail. Same kind of economic impact. But they had a vaccine by October of the same year.
Yeah, I know. And it still, here's the interesting thing, though. It still took how long? Unemployment went from, I think it was
4.5% to 7.5%.
Right. But it took till the end of 59 for that 7.5% to come back down.
And that's the interesting thing. They got, was it 40 million doses of this vaccine out, or it was a huge initiative.
Yeah, within 6 to 7 months of it happening, because it was not an extremely rare strain. It was something that was.
Well, we have a rhythm for dealing with the flu, right? We know how to manufacture a vaccine. But the thing that shocked both of us is it still took another year and a half, right, for it all to unwind after the vaccine showed up.
Yeah, so here's what's instructive. What the takeaway from this conversation is that even if a vaccine shows up, history says it's going to take a year or 2 years for that to wind its way through the public, and then to have any sort of an impact on the economy.
That's right. And we're going to end on a positive note about how we come out of this. And that is one of the ways, but we want to be really conservative in thinking that it's just going to be all over the moment we have a vaccine.
Yeah, that's right. So, all right. So this is interesting. So if you would, look on the right and look at the Great Recession. So what we want you to understand is that unemployment was around 5% in 2007. Now, just as a sidebar, the national historical average in the United States, and today because of a limited time on this, we're just going to use the United States as kind of a placeholder for what can happen around the world. But in the United States, the national historical average is 5% unemployment.
And I would just say to those, we have probably 52 countries watching right now. Yes. So hello, KW Worldwide and everyone in Canada and Mexico. Watch the numbers that we're tracking. If you can track unemployment, GDP, sales, interest rates, the same handful of stats, that's how you get really informed and understand everything that's happening.
Yeah, that's exactly right. As we've always said, every time we have a chance to talk about this, just follow the numbers of unemployment and GDP and ultimately inflation. But those are the three numbers. As employment goes, so goes consumption. So we'll talk about that in a second. But unemployment or employment is the first big number to look at. So in December of 7, we were doing really good. We'll look at GDP in a few minutes, and you'll see we were doing pretty good. And all of a sudden, recession hits, and we go in a short period, but about 2 years, it climbs all the way to 10%. Okay. Now I'm going to stop right there. And I'm going to look at the left graph and point out that it took 2 months to go from 3.5 to 14.7. And in the history of recorded time, this has never happened that quickly before.
Truly unprecedented.
It's unprecedented. So if you go back over, though, so understanding that you're in unprecedented times is an absolute. If you go back and look on the right again, the second thing that you notice, Jay, is how long it took to unwind that 10%. So if you look down at the bottom, you'll notice that from 09 to 12. So we're talking about a little over 3 years to get to 7.5%, and it wasn't until 2016 that they got back to 5.
Right. It took 7 years from the peak to get back to normal levels of unemployment. And I mean, we knew that that was kind of a slow recovery, right? It wasn't a red hot recovery, but that's 7 years.
Yeah, and it's not normal for you and I to try to make predictions per se, but if we were asked to make one, we would both agree that the most likely scenario is if this takes a while to unwind. Yeah. This is not there's not going to be anything as a fast recovery. It'll take a while to unwind. Notice that we ended up, though, rather rapidly back as the economies start opening back up in certain areas, that it settled back in at 8.4. Now,
well, we both talked about this. We'll know by the end of the year, we'll start to be able to tell, like, how many of those people are going to stay unemployed. I mean, this is opening and shutting. People got furloughed, they got brought back. We're going to see how this unwinds in the next few months to know, like, what is the actual true unemployment level that we are setting this at right now?
Well, and here's probably the most important slide that we could show you today. This we're going to spend a few minutes on this because we need to unpack this for you to fully understand what's going on. So let's start on the right and look at leisure and hospitality. So this would be restaurants, hotels, music venues. You know, just as a sidebar, we're in the historic Moody Theater, and this is the home of Austin City Limits. There's no music going on. It looks a little different than I've normally seen it. But this venue is in there. It's been impacted as well. There are no live tapings of Austin City Limits going on right now with crowds in the audience. So that's what that is. And I want you to notice that the unemployment rate for this group is 21.3%. Now, put that in historical perspective for us.
I mean, we haven't seen that level across the board since the Great Depression, when almost a quarter of Americans were unemployed. So that's a massive number. For that segment of the industry, it's really devastating, and we all know that.
Yeah, that's exactly right. If you swing over to transportation and warehousing, sort of in the middle, at 13%, this is by air, by water, by
planes, trains, buses, moving people largely, right? Transportation, and then the warehouses that serve retail and everything else.
That's exactly right. And they're at 13%. So, which again is astronomically high. So I want you to notice that what's happened so far has impacted the men and women who make the least amount of money on a weekly basis on average have been impacted the greatest.
I'm not sure you said that. The blue bars is the average weekly income by industry, and the purple bar is their level of unemployment. So you can see it's very unequally being meted out in terms of unemployment and opportunity.
And if you take the four to the far right, so from transportation and warehousing, education and health services, retail, trade, and leisure and hospitality, and you average that out, it's about 12.3%, Jay, which again that's a major recession. For that group of individuals, that is a major recession. Now, if we go to the far left, this is where the story applies directly to the real estate industry. If you'll notice, the men and women that have the highest weekly earnings in the United States were impacted the least.
They're below average in terms of unemployment.
Well, 4.2%, an economist would tell you, is very close to being 100% employment.
Right, because some people are migrating between jobs.
That's right. 4.2% is an incredibly low number. If you take the five that are from financial activities all the way to manufacturing, that average is what?
6.3%. So the five highest paid industries are just a little bit above average in terms of their unemployment rate.
Yeah, and if you take out financial activities and just take those four, that number is what? 6.8?
Yep.
Yeah, 6.8. So again, even though, just as a sidebar, Jay, even though 5% is the national historical average, anything at 6 or below is a really good number.
Yeah.
You're at 6, and your economy is okay. It's not great, it's not amazing, but it's okay. You're not in dire straits. So if we literally look at from manufacturing all the way to financial activities, they're not as a group overwhelmingly suffering. And these are the highest income earners in our economy.
Well, I mean, the punchline, Gary, I mean, this is what we're trying to get at, is those people are the ones that are buying and selling homes, and we'll see how quickly they did it. This is how you have the sales that we've been having.
That's right.
How you have a spike in the stock market when you also have this high unemployment. It's just not hitting the same people the same way.
Well, you mentioned the stock market, and we just want to remind you that the stock market is not the economy.
No.
By any stretch of the imagination. It's not. It's a completely separate animal unto itself. But what I want to just dot the I that you just said, and that is the reason why the real estate industry, one of the reasons that the real estate industry has so far not been incredibly affected is because the men and women that make the most amount of money are the least that are suffering financially at this point.
That's right, at this point.
Now, we'll make this comment again, but please understand that if something doesn't occur to help the men and women that are on the far right, their lack of employment begins to affect the far left.
It can be like dominoes. You know, the next spot we talked about, you know, you've got transportation and warehousing is being impacted by retail and leisure. Now manufacturing and wholesale might be impacted by those staying out, and it starts to work its way from right to left.
Well, that's right. The dominoes go this way, don't they?
Yep.
And they could end up falling all the way in a big way to the far left, depending upon what happens.
Right.
The stimulus package that was given so quickly kept the people on the far right, for the most part. That group, it brought a significant amount of support, just enough in order to keep anything happening to the far left.
We'll see that when we get to delinquencies. They were able to keep paying rent and a lot of things. That was the support they needed to get through that time.
Yeah. So here becomes the second bookend to this picture, Jay. And let's start on the left on this. So this is unemployment and housing by age. So if you look on the far left, you'll notice that the 24 or younger group, who, by the way, only make up 3% of the home buying population in America, are at 14.1%. Again, that's a horrible number.
Yep.
It's only 3%, though, of the buying public.
So we're not feeling that unemployment in our industry very much at all.
Hardly at all. You get to the 25 to 34, which would normally be your first-time home buying sector.
Right.
They make up 25%, which is typical of the percent of first-time home buyers in the market. It's very close to the national average on that. They're at 9.7%. That's a significant number. It's not overwhelming, but it's a significant number. However, if we get to the 35 and older crowd, which is the group that makes up 72% of all home purchases in the United States, they're only at 6.8.
Again, it kind of helps to understand how is the housing market still thriving. It's because the people who buy houses have not yet been really impacted by this.
Yeah, the people that make the most amount of money and have the most disposable income, and the men and women who make up the overwhelming majority of buying homes, the 35 and up crowd, are the least affected with unemployment. So their incomes have been affected the absolute least, Jay, and their employment has been impacted the absolute least of the major age groups. And that's why housing has seen a rebound at this point.
And it was fast. Those people that were secure in their jobs, right, and at that right age range, we'll see in the housing sales, they took action pretty quickly.
Yeah, they did. And, you know, I just want to make a sidebar comment, and that is, we're talking about this in clinical terms right now. These are people's lives. And whether it be 6.8% or 9.7 or 14, that means there are significant people in our society today that are in trouble and they're in pain. So I don't want our clinical, analytical, statistical conversation in any way to demean or dismiss the tragedy that's occurring in real life that we're actually talking about in somewhat clinical terms.
Yeah, and again, our goal is just to inform you, like help you understand why the market is doing what it's doing, and then later how we can respond to it.
Yeah, that's exactly right. All right. So let's switch gears then. So we now have a clear understanding of income and employment, and it really paints a very vivid picture for why the real estate industry in the United States rebounded the way it did. Because people who had jobs and had money, so they had the means to take action, looked up and said, I'm taking action. Yep. Right, I'm either going to remodel my home or I'm going to switch houses.
Yeah, you were sharing with me in Austin, Texas, if you have the means, you have a 2-year wait to get a swimming pool.
Yeah.
Right? That's how much demand has showed up in some sectors by the people who can afford it.
Yeah, that's exactly right. You can't buy a kiddie pool.
No.
So GDP would be the next number, Jay. And shoot.
And this is about spending, right? 67% of GDP is driven by consumer spending.
Yeah.
So if people are unemployed, they're not spending. If they don't have a CARES Act to get them through, they're not spending. And that's what creates these massive drops.
Yeah. Corporate buying, business buying, government spending. Right.
Exports.
Yeah, that's the minus imports. Yeah, that makes up the other
33%.
Yeah, that's right. So when you look at this again, in the history of recorded time, the speed at which GDP dropped they've never seen this before.
No, it's never. And that's an annualized number. If the activity had stayed that way for the year in Q2, it would have been a negative 31.7%. It's massive and unprecedented. And the Great Depression, the biggest drop we saw was 12.9%.
Yeah, I know. Yeah, we've never seen anything like this at the speed at which this happened. And we all felt it. Mm-hmm. There was an absolute sense of panic that occurred across the board, and rightfully so, right?
Oh, yeah.
Yeah, it felt like right.
Well, it galvanized all of us into action, right? Those of us who were ready, we were like, okay, this is serious, and we have to move.
Yeah, that's right. So this really gives you perspective. So just kind of take a look at this. If you start at the left and kind of work across, one of the things that you notice immediately is the numbers 4. And you'll notice that in the run-up to 2001, wow.
The dot-com economy came online.
Oh my
The
gosh.
market was incredibly hot. We actually ended up with a bubble, which is why it dropped in 2001.
Yeah, it dropped. And then, by the way, within 3 years, it had regained its momentum, and which, of course, led us to 2005, right? And the Great Recession was on. But notice, as bad as the Great Recession was, and it was devastating, by the way,
Yep.
GDP on an annualized basis never dropped below 2.8.
Yeah, compared to the last slide, the worst quarterly drop we saw was when Lehman Brothers went down in the end of 2008, and it was about 8.5%. But you work out the whole year, it was negative less than 3%. Mm-hmm. And this year, we're expecting to end the year at negative 6%.
Which again, you go, well, that's not as bad as 31, and you go, well, yeah, but let us put this in perspective. 6 would be the 5th worst GDP year in recorded history in the United States.
Right. 3 of those were there in the Great Depression, and one, I have to look at my notes, that 1946, when the U.S. government stopped spending on World War II, it wasn't even a recession. They just removed all that government spending, and it dropped.
So the definition of a recession is 2 quarters in a row, so 6 months in a row of a drop in GDP. So if you understand that, you'll then realize that the recession, they all said it happened in 2008 and 2009, but the reality is that it actually started back in 2005.
Oh yeah, we remember it. We were doing a mastermind with our top agents. It was the fall of 2005.
Yes.
And one of our top agents said, our showings have dropped off. And that was the first indication that buyers were saying enough is enough. Yes,
that's exactly right. So when you only see the 2 negatives right in 2008 and 2009, please understand that recession lasted from 2005 all the way to 2009. Mm-hmm. That's how long the recession actually lasted. And we all felt it, by the way.
Well, it was very centered in the real estate market.
Yeah, and then it started climbing out starting in 2010, but it one of the things that we also need to point out, and we've pointed this out for the last 7 or 8 years, and that is from 2010 all the way to 19, except for 18, that's very pedestrian. That's very average. 2% GDP growth is kind of the minimum target number. 2.5% to 3% is what they really want to see.
It just means we're healthy. It doesn't mean that we're strong or good.
Yeah, 4% is extremely robust.
Yes.
By the way, but anything between 2 and 3 is good, solid, but it isn't a boom. Which is why coming out of the Great Recession, it never felt like a boom. It was just this gradual on top of it, on top of this building of just a little better, a little better, a little better, and a little better.
And that's one of the reasons it took 7 years for employment to get back in line, right? Because it was just kind of a gradual recovery, and people started getting their jobs back gradually.
Yeah, and here's the other thing. It's because you never saw it boom, you never saw construction come back fast.
Right.
So one of the we're going to look at this in just a second, and that is the months of available inventory. Mm-hmm. But the reason why that never got back into any sort of a balance, excuse me, is because of that right there.
Yep.
And because of that, we'll talk about in a second. But there it is, and this is most likely where we're going to be. The prediction of what would GDP look like next year, nobody knows.
Yeah, and we try to stay out of the crystal ball. Like, we're trying to give you perspective to say, maybe make hay while the sun shines, for sure. Yeah. Save a little bit right now.
Well, that's right. We'll talk about that in a second.
Yeah.
So let's then look at how this translated. So at this point, we're down from 2019, 4.7%. I just want to remind everybody that build up to 2019 was an amazing year.
Yeah.
It was a year of all years, the best year recorded, right? So when you start comparing 2020 to the best year ever, only being down less than 5%, is actually a big deal.
Yeah.
There's so much room in that low of a drop that a lot of people are having their best year ever, right? Yeah. So let's unpack this real quick. So if you go to the far left, you'll notice that the yellow is 2019, the blue is 20. So you'll notice that January, February, and even March, we were headed towards having an amazing 2020.
Yeah, and that number in March is kind of, you look at it, dropped. Remember, for most of us, for half that month, we could not do anything but close the business we already had.
Yeah, that's right.
So we were shut down through a lot of that.
And still recorded a better month than the year before. And then it hit. It hit in early to mid-March, and the wheels come off in April, they come off in May, they come off in June. But what was happening in May and June is even towards the end of April contracts started being written. Well, people that had means.
And that's thanks to you. Like, everyone that's watching this, you figured it out. Like, how do we go virtual? How do we still serve our customers? You figured that out in late March and early April, and were able then to work with them, all of those people who wanted to jump into the market.
Yeah, the speed at which you and I were sitting there going, we're gonna have to explain to everybody what they need to do. And when we started calling around, we figured that, oh my gosh, they already figured it out.
Yeah.
Yeah. The real estate industry moved very fast to virtual, right? And this is what this pandemic has done, Jay. It has collapsed the speed of disruption. Mm-hmm. We talked about virtual and a digital world, and how fast we would migrate to a digital world. And most likely what's happened is what was going to take another 5-6 years to organically get adoption has literally happened overnight.
That's right. It accelerated the trends that were already there.
And it exposed anybody that was saying, oh, we have plenty of time to migrate to a digital platform or a digital way of doing business, got caught. Keller Williams was made fun of when I started talking about this about 3 years ago.
Yeah.
Oh, I have a message for that, but anyway. So it happened, and here we are, right? And what's interesting is that if you look at June and July, and then you look at August and September, yeah, all good months. All actually, we're climbing right out of it.
Yep, and when we look at our pending data, we know that August and September, we're looking good.
Yeah, what will happen? Well, we'll talk about that in a second. Home prices. So if you notice again, what happens when there's limited supply and there's strong demand?
And historically low interest rates. Incredibly cheap money out there is driving prices up.
Yeah, and we can, there was a lot of noise at the beginning of the year, and rightfully so, that interest rates would be raised, and they were. And we saw that. Because they saw this unbridled demand and inflation, and they wanted to begin to grab a hold of that, and so that the rates were coming up, and then this happens, and we're off and running.
Yeah, I'm not sure when rates will go up. Most people are forecasting it'll be some time before they do.
Yeah, I'd quit talking about it. There's just no motivation. There's nothing driving it. And you and I were talking about this, man, and that is there's a good chance that our economy has gotten addicted to low interest rates, and even trying to raise them to any sort of significant levels to have something that they can later lower if they need to. I don't know how that happens. Yeah. It itself could cause a recession. Just doing that, right? And most likely would. So this is the big tail right here. This is the month's supply of inventory. The yellow is 19, the purple is 20. So if you go to July and June and July, and you look at those percentages, right? 3.9 months, 3.1 months of supply. This is historic, right? Just a sidebar. From 1999, just write this down, you guys. From 1999 to 2016, there were only 4 months that had 4 months or less of inventory, Jay.
That's right. It was incredibly rare for that long period of time.
Only four months between 1999 and 2016. However, listen to this. From 2017 to today, 20 months.
Out of 43.
Out of 43. So almost half of the months between 17 and now, you had below 4 months of inventory.
Yep.
Jeepers.
And what's funny is, I mean, we've been talking about this throughout the recovery from the Great Recession. We had all those builders go out of business, so we didn't have the new supply coming online. And now, I mean, we had a low inventory situation that has really been accentuated by this crisis.
Yeah, that's right. That's exactly right. And we don't see any let up. That's the challenge. And that inflates pricing, right? Yeah.
Well, I mean, I think there's a lot of resale people out there that might be thinking about they want to move but don't feel secure. And I think when we talk about later how we get out of this, there are a lot of people that maybe pin up demand later for that, but right now we're not seeing it. People are afraid to sell their most valuable asset if they don't have to and they don't have a plan for buying. Well, and this is why you're beginning to see bridge loans discussed again, because the opportunity to go buy you're going to sell your home. Mm-hmm. The question is, would there be anything to buy? Right. And so this is why you see all of a sudden that financial mechanism showing back up in conversations across the country. And we just threw this slide up here just to give you guys a sense. Look at this. The numbers are all over the map, right? So this down less than 5% nationally, we just wanted to point out that's not relevant to people in Miami or LA or Philadelphia or Boston. Well, it's like the average temperature in America. It doesn't really matter if you're in Florida or Nome, Alaska. No, right? And the challenge is the federal government doesn't look at those numbers, though. Mm-hmm. They look at that national average and they make their decisions based on the common experience, not the individual experience. What we can point out is that we can see sales are down either a little or a lot, and inventory is down a lot across the board. And what's really curious is that price is up across the board. It just depends on how much in each of those categories.
Yes, that's exactly right. Pay attention to your numbers. Look at your unemployment locally. Look at your economy locally, and it's going to tell you what these numbers are going to be, Jay. All right, so let's switch gears and let's talk about, as we end this section, let's talk about what we think's coming up next. And when we asked our research team to help us out with this, they actually had said there were option 1 and 2.
Yeah, 2 scenarios.
Yeah, and you and I read it, and we looked at our amazing team, and we said, guys, we don't think these are options. We think these are stages. Mm-hmm. And so let's just kind of walk through this. So I want to just point out what K-shape means. And K-shape means that there are 2 distinct groups having 2 distinct experiences.
We saw that back with the unemployment by industry, right? There are some that are doing well and some that are really not.
Yeah, so again, those who are indirectly impacted are having a better time of it than those who are directly impacted by it. And they call that a K-shape, and you can just see the K. So going back to this. So the number 1 in stage 1, the owner-occupied market continues to see strong demand. And right. the reasons are obvious. You have historically low interest rates. You have income for earners in income ranges, typically of homeowners, remaining stable, mm-hmm. right?
And they're creating that demand on limited inventory.
Yeah, that's right. That's exactly right. And you have low inventory. Number 2, potential stumbling blocks are potentially in the investment market, right? Renters begin to struggle, leading to missed rent due to high unemployment in service and retail industries. And this is going to happen, by the way. It's already happening. You just have the forbearance.
And I mean, when we talk about the social climate right now, this actually creates a bigger gap between the haves and the have-nots. We have to acknowledge that. The people who can afford to take advantage of low interest rates are going to benefit even more over the next few years. So it doesn't serve us to stay in a K-shaped recovery for a long time.
Yeah, that's exactly right. And by the way, all of this could push rents down.
Yep.
Loss of cash flow could lead to more rental properties going up for sale, and potential shift from income to owner-occupied property, yabba yabba yabba. It's this series of dominoes. What happens when you have all this forbearance, and then when ultimately that ends, and they don't have a job?
Yeah, that's when the other shoe drops, and we'll talk about that when we look at delinquencies, but that is one of the big risks that we can look at and keep an eye at for 2021.
So just imagine again, you guys, what would it have looked like if the federal government hadn't stepped in and the CDC stepped in and created forbearance?
Right.
What would have happened?
Well, we went through that in 2008, right? The last housing recession, we saw unprecedented REOs and short sales. People were pushed out of their homes.
Yeah, and people are asking us now, so what about foreclosure and short sales? And our response is, not yet.
Not yet.
And there is time. Understand that the political climate that we're in the United States is interesting and somewhat stressful. They acted very quickly, by the way, right off the bat, and thank God they did. It was the right move, and all parties should be congratulated. Even though not all the money got to the right places, Jay, enough of it got to the right places. Yeah. Now, here's an interesting point to make, and that is all the money that got to the wrong places ended up in the stock market or a savings account. Unprecedented savings, right? Unprecedented growth in savings, right? You never would have imagined that. And number 2, the stock market going up. Yeah. Well,
those people who got relief, a lot of them were able to go and spend that money, and they did save it, which is actually could be a long-term bright spot for us. Well, if they get their jobs back, they have savings and they can do something.
And everybody that got extra money that decided to go to the stock market put it in Facebook, Amazon, yeah. Google, Apple, right, and Tesla, and off they go. Right. Anything that looked like it was a digital platform-based business, like Zoom, literally zoomed to over, what, 100 billion in valuation?
Well, again, we talked about the acceleration of
trends. It makes no money. It makes no money, by the way.
Oh, yeah. That's a whole other topic, but the acceleration of trends that were already in place happened really fast, right? And people expected more of it.
Well, you're going to see, I'll make one more sidebar statement about the stock market, and that is you are going to see those businesses like Zoom and others that have high valuations and actually don't make money, you're going to see them going on buying sprees, trying to buy EBITDA, trying to buy cash flow.
Right.
I mean, that's the natural outcome of that kind of valuation for businesses that know the other shoe's going to fall. At some point, they're going to expect proof that it actually makes money.
Right.
Otherwise, you're going to have a failed IPO or whatever else.
So they'll use that equity to buy cash flow.
I think so, yeah. All right, so stage 2, housing markets in a more traditional recovery. And that would be, number one, we're likely to see negative impact on other parts of the economy, and the recovery then becomes slow. And I would bet that's kind of what's going to happen. We're going to have a year or two of tough, and then we're going to slowly start to climb out. That's what I believe. Right, the pandemic is a very unique situation, and the timing on its resolution is completely uncertain. So when I say all of that, I'm actually saying that and we'll talk about in a second, of the things that will happen that can mitigate this.
Well, I mean, one of the things you always teach us in these is we need to be acting like the market we're moving towards, not the one we're in. And we know that the market we're in right now is kind of unprecedented, this kind of bounce back. But if we think that next year might be slower, we need to be preparing for that today.
Yeah. I'll make one more sidebar comment about that, Jay, and that is you survive to thrive. Mm-hmm. And understand that when you go through these kind of circumstances, there is a moment when there's a true transfer of wealth that occurs, and it's most likely going to happen to some degree again. And if you can put yourself in a position to survive, even if you go backwards, but you're making all the right moves financially and professionally, you can, and getting ready, you can position yourself that as this comes out, you are first in line. You are off the starting block faster than anybody else, and you will reap tremendous personal and professional reward. And history says that happens every time. Without doubt, you can bet your life on it.
We learned and studied that in the last shift. The companies that give up market share during these times rarely get it back, and the ones who gain it don't give it back very quickly at all.
Yeah, that's
so
right.
There is an opportunity from a business standpoint to grab market share on the tail end of this for sure.
That's right. Recovery in the meantime is slow, and the impacts of lower consumer spending will cause unemployment to rise in industries that are currently doing okay. Mm-hmm. And that's that domino effect that we said, starting at the lowest wage earning industries and ultimately impacting the highest. Demand for purchasing homes is going to slow when demographic groups typical of homeownership begin to have a negative impact. Again, go in this direction. Prices are likely to continue to grow because of low interest rates and low inventory. And it's a little disheartening.
I know. We only have, I promise, one more kind of bad what if before we talk about the positive.
Yeah, and we've kind of hung out on residential real estate, Jay. We chose not to go to commercial because it is such up in the air right now. It is very hard to predict exactly what's going to happen in the commercial real estate industry. As we began to see light on that, we'll report it and share it as fast as we get it. But it's kind of a wait and see right now. They're trying to figure it out. Mm-hmm. Then demand will begin to recover as unemployment recovers across the economy. And again, you can see that in GDP and unemployment trend numbers over history. The impetus for this will likely be a resolution of the pandemic or a vaccine, to be honest. So what could go wrong, right? Forbearance system gave a maximum forbearance period of 12 months. The system works under the assumption that within 12 months, most borrowers will have regained employment and be eligible for restructuring, right? What happens if that doesn't work? If we get to Q2, right, and the number of loans in forbearance and rent, by the way, remains high, we're going to see some negative consequences. We're going to see homes begin to moving onto the market as we close in on the deadlines, and owners realize they won't be able to restructure.
Well, this is an opportunity for us as fiduciaries to really inform our clients.
Well, thank you for saying that, Jay. That's exactly right. If you know of anybody that has the risk of not having a job, but they own a home, there needs to be a real frank conversation around live to fight another day. Mm-hmm. And that is, if you believe you might need to sell in the next 12 months, you might want to consider selling before then.
Yeah, and
you don't have to. It's entirely up to you. But you should just be aware that if forbearance doesn't and it doesn't end with people having more stability in employment, we're going to see houses come on the market, and it may be houses that were purchased 6 months before or a year before, and there may not be a lot of equity in that.
If people, unlike the last recession, if people had bought their homes earlier, they're likely to have a substantial amount of equity, which does protect us and them.
Yeah, that's right. So loan delinquencies are already at a significant level, you guys. And
this is someone who has been in delinquency for 90 days, right? So this is the actual number of homes in forbearance is about 3.6 million. And that's about 7%. So it's a larger number that are in some stage of forbearance right now.
Say it again, 7% of all homeowners are in forbearance right now.
Right, Jay. And it's only about 3% of them that are 90 days or more.
Yeah, now some people took advantage of forbearance, whether they actually needed it or not. Mm-hmm. They took it as almost like an opportunity to save some money. And, you know, I actually can't blame them. I think that might have actually been smart. If this is opportunity, do it. So we don't know what the real number is, Jay. We can only look at the unemployment numbers to begin to get a sense of what that could be.
And this is where government can step in or not, right? They've had a moratorium on evictions. They haven't provided any relief for landlords, right? So there's some other things that we have to watch going forward.
Yeah. So what could make a difference? So let's wrap it up on this note. So let me just say again that I've been through a lot of tough times in my life. This may be the toughest of them all, simply again because all the other tough times did not involve pandemics. Natural disasters all coming together to create a messy soup that is just horrific, to be honest. It's just so tough. So what could make a difference? Well, something that makes things closer to normal before we get a vaccine. For instance, in-home rapid testing that can be done daily. By the way, that's massive. The ability to be able, right, when I came into the building today, and you as well, and everyone here, we had our temperatures taken, right? Yes. And we had to answer some questions about where we'd been and what had been going on with us to get into the building. That's not the same thing as having a test that says whether you're positive or negative.
Yeah, it's almost instantaneous, because we know one of the crazy things about this pandemic, unlike even the other ones, is that people might be spreading it for as many as 2 weeks before they show symptoms.
Yeah, so
knowing how to stop that becomes a massive tool.
It's real simple. When you have in-home, when you have rapid testing ability, and then you have widespread organized contact tracing that can occur rapidly, right? And you have improved treatment protocols, which is occurring daily. Right.
That is, if you get sick, you have a higher confidence that the doctors can make you well.
And the odds are those three things are happening in real time and will most likely occur faster than a vaccine.
Mm-hmm. That's what we learned from the 1957, right? That even with the vaccine, there was a long drawdown, but those things can happen very fast.
Yeah, it's just, yes. And there's a great likelihood that we're going to see movement in those things by the end of the year, which would give you which would then allow you to peek over into 2021 and have a sense of what life is going to look like during that period. Yep. You know, I had a sense of it just driving here and saw people with masks either on or hanging, and I thought to myself, this is the new normal, and this is not something that's just going to go away. Our kids right now are going to grow up wearing masks, and they're going to acclimate quite quickly to it, believe it or not. Adults will struggle going, oh, but kids will ultimately, when they get over the fact that they're probably not the group that's going to die the most from it, but they're the groups that will spread it the most. And when they get over their bad self and respect that, this is going to be the life is, right? Getting a vaccine much sooner than expected, right? That changes expectations about the timing of the recovery and everything at that moment. But I just want to warn again that if we go back to 57, the existence of a vaccine saves lives, but the economy will still take a period of time for the vaccine to wind itself, because all of a sudden these businesses have to start back up. Jay. And they have to gear back up, and they don't do that. They do a little of it in anticipation of increased demand, and then it's we open up a little bit more, and then people spend a little more. And then we open up a little more and they spend a little more. And we open up a little more and they spend a little more. And then over time, you begin to see that as a trend. And you go, okay, now I'm going to place big bets. And by the way, you'll see major businesses with lots of cash, they'll start making those bets earlier. But when you can now see the trend that we really are trending towards a solution, the economy is now opening back up, people are more and more getting employed, you'll see bets being made across the spectrum of income.
That's right. And
that's when things open up.
We have like 100 vaccines in trial right now, 9 in the third stage. So there's an unprecedented amount of government and private capital chasing these solutions.
Yeah.
The faster they show up, the more momentum we'll be able to start building up quicker. It is like the faster that happens, the faster we regain momentum and the faster we get out of it. The longer it takes, the longer it takes.
Jay, I started my career in 79. Interest rates went to 18%. And there were two kinds of people. There were agents who went to the couch and said, I can't imagine people doing business during this period. They kind of shut down and said they would wait. And then there were other people like myself that said, nah, there are going to be people that do business, and I'm going to go find them and help them as best I can. And you have a decision to make right now as a real estate professional. The world needs your help. They need your advice. They need your counseling. You have to make the decision. Are you going to be there for them? And I would highly encourage you to make that decision.
That's right.
To be honest with you. All right, well, let's switch gears. So in the past, so this is a new mega camp for us, completely new experience, and a lot of, like I said, a lot of time and effort has gone into the rest of this day. And I can't, the list would be endless of all the men and women who have put in such hard work to make this happen. So I'm excited for it. It's a different thing for us. You know, in the past, our stage has been graced by amazing real estate agents, right? From Sarah to Ben to Chris to Lance to Kenny to Nick to, you know, you name it. The names could go on and on and on and on, Bob, that have shown up and shared. We respectfully took a slightly different turn this year because of the ability to edit.
Yep.
So we did not trust Wi-Fi's. We did not trust any way going 100% live. So we went into the studios for the last month and a half, and we tried to record as many interviews as we could of faces that you may never have seen before that are doing amazing things. So we went that path. And the other thing is we quickly learned that there was no way to go right to a 5 or 10 minute interview. So we let the cameras roll, and we ended up with wonderful interviews that lasted from 30 minutes to an hour. And then we went straight to the editing room because we couldn't do that. And we looked for what we thought was something you'd never heard, or something that you knew and had heard before but hadn't heard exactly this way, and we edited to that. So today is going to be the edited version. It's going to go fast. It's almost like speed dating. Yep. We're going to go really fast. Some of these interviews, the essence was made in 5 minutes. It's a 5-minute interview. 7 minutes, it's 7 minutes, and we're on to the next. If you blink, you may have missed something really cool, because we're going to switch gears and switch gears and switch gears all day on you.
And it's very much a best of highlight reel that we've collected over the last month and a half.
Yes.
In about a week's time, all of these videos will show up in your video archive right there on the site, so you can go to the individual sessions that you really want to relive and share with your teams and have access for 60 days. So you'll have access to this for a long time, and we'll have lots of resources in there for you. I want to quickly acknowledge,
Hang on one second.
Okay.
I also want to point out that the full-length interviews will be there within a month or less. We've got to edit and make sure that they pass legal muster and all of that. but they will also be exclusively to you for a period of time.
Probably getting that in to connect with only people who registered getting access. But yes, we are getting the full length of interviews that some of them are magical.
Oh yeah. I want to double down on that. They're all really good. And we had a lot of fun, and you'll see that today as you watch these. But it's gonna be well worth taking the next couple of months and literally unwinding and choosing one or two for the week or for the day even, and listening to those and sharing those in your businesses. They're very worthwhile.
And just a couple of notes. I want to acknowledge 4 people that agreed to provisionally provide us content that we weren't sure we were going to make it. They did not make it. Their interviews are amazing, and we will share them with you at a later date. But Tom Nickley, Lindsay Soprani, John Verdeau, and Chad Murdoch, thank you so much. We'll be sharing those interviews at a later time. Just want to acknowledge you publicly for giving your time and sharing with us.
Well, the fun thing about that is that in order for us to edit, you can't have a stream of consciousness. And so part of the challenge was getting amazing people to take a breath, come up for air, so we would have a spot where we could then edit from. So that was one of our challenges. But having said all of that, you ready to dive in?
I'm ready. We've got a great lead off with Keith.
I'm ready to get this going. I'll make one other statement. And this is the times that we live in, you guys. But do not violate the do not call list.
Yeah.
This has now become a truth that no one can ignore. You're going to hear a lot of conversations today that are going to talk about making calls and in no way do we endorse that you would violate the do not call list. Please know that if you choose to violate the do not call list in today's legal climate, you're on your own. Yeah. So don't do it.
And your market center may choose to not be in business with you. It's that serious, folks. The TCPA, we've got to follow it, and you're going to see warnings throughout if we felt like we even got close to that. Yeah.
So we've kind of laid the day out. We're gonna attack lead gen. A section for that. Then we're going to go to buyers and sellers. Mm-hmm. Then we're going to go to leverage.
Yep.
Right. Then we're going to go to social equity.
Right.
And
we're bookending the day with 2 amazing keynotes.
Yeah, so we're going to start with Keith Cunningham. So if you ever, again, read the book Rich Dad, Poor Dad, Keith is the rich dad that is being parabled in that book. Right? The financial guru for Anthony Robbins for all these years, a good friend of mine and business partner. And so he and I have a different conversation. We did a conversation a couple of months ago that we published to everybody, just completely different. And he doesn't repeat himself, which would be rare for Keith, but it was tough to edit that. And then we end the day with a friend of mine, Tim Ferriss. And so it's really interesting. We thought we would launch with Tim, and Tim got philosophical on us. I'm not so sure he didn't smoke something before he came on the screen, just to be honest, and I think he might even admit it. I'm teasing. But we found him in a very philosophical mood, and we realized that it was the perfect way to sit back, grab your favorite beverage, and let Tim unwind the day for us. So it's gonna be jam-packed. I would just say again as we start, the pandemic, social unrest, and let me just say again that I was going to speak to that right now, but the interview that we do towards the end of the day about social equity
with our task force leaders is amazing.
It's amazing, and it says it all. And I'm going to let them be the voice of that because they're the best voice, and they say it perfectly. And then natural disasters. So I'm just once again just say, if you have $1 and you can spare it either to KW Cares or into gift cards into the Gulf states or the Northwest region, please do it. Please do it. People need it right now. They don't need it tomorrow or the next week, or they need it right now. And you can make a difference with just a little. So with that being said, we're going to dive into Keith Cunningham.
That's right.
Hi, Keith. How are you today?
Great, Gary. Thank you. How are you?
I'm good. Good to see you. You're well? Family well?
Everybody's great. We're happy. We're healthy. We're being safe.
Good.
And how about you?
Good. Yes, absolutely. At this point, knock on wood, we're doing everything we can to be as active as possible and at the same time as safe as possible. So, hey, thanks for joining me for this. You've had probably one of the most storied business careers of anyone on the planet. And mainly because not only have you, been in the business world directly yourself, but you've also had the opportunity to ride shotgun with some of the most extraordinary business people that literally have ever lived. And the first question I just want to ask you is just sit back for a second, Keith, and if you would, tell us some of the common themes that you've seen in your life for those people that succeed at a high level.
It's such a great question. I think there are some common themes, but I also think that one of the mistakes people make is they look for a magic pill or a secret sauce or some sort of voodoo economics that if they just could do this one thing, then it would automatically lead to success. Right. One of the things I love people to do this exercise. If you have a piece of paper in front of you, draw 3 intersecting circles. So if you drew 3 circles that all 3 intersect at some point, in the upper left-hand circle, you might want to label that one something I'm good at. And in the upper right-hand circle, you might label it something that people want. And then in the lower circle, you might label that something that people will pay for. And where those 3 circles intersect, something I'm good at, something that people want, and something that people will pay for, that tends to be a sweet spot. Now, if you thought about 3 intersecting circles, right where they intersect, there's another little component, which is called luck. And most successful people don't like to talk about luck, but the reality is every honest, successful person I've ever met would say, yeah, I was good at it and people wanted it and they would pay for it. And you know what? I hit a crease. I hit a sweet spot. I had the right product at the right time. Had I been 5 years earlier or 10 years later, if I wouldn't have had this particular partner or that particular mentor, or if I was in a different market. So there is some luck involved. There's some luck involved with being successful, and there's some luck involved with being unsuccessful sometimes. Sometimes you can do all the right things and it not work out. And there's a terrific book that if you haven't read it, I would highly recommend it. It's a book by a professional gambler. Her name is Annie Duke. Anybody that watches the poker stuff on TV is going to be familiar with Annie Duke. And unlike most poker players, Annie is actually highly, highly educated and has written a book entitled Thinking in Bets. Thinking in Bets. And the book is spectacular because it helps you realize that you need to not only collect data and analyze the data, but then there's some risk and you make a bet, but you're thinking in consequences. And I love the way her brain organizes this idea of, okay, what's it take to be successful? You can have a great hand and still lose the hand. And you can have a lousy hand and still win the hand. Wow. And so it goes back to this idea to me that business is not a bathrobe. It is complex, and there are some fundamentals. I named 4, something you're good at, something that there's demand for, something people will pay for, and then there's some luck. I think there's another fundamental, which is consistent execution. I think a lot of people Look, here's what it means to me. Ordinary things consistently done produce extraordinary results. I think what most people try to do is execute on something huge for an intense burst of time, and then they don't get the instantaneous results, and so they move on to the next magic bullet secret sauce that's somehow gonna solve all their problems, as opposed to what are the ordinary consistent things that have to get executed in order to produce. So when you and I think about something we're really good at, and you're really good at a lot of things, Gary. If you think about things that you're really good at, you didn't get good at it as a result of one huge thing you went and did last Tuesday. The stuff that you're really good at, you executed on over a long period of time, and you executed ordinary things. And I think that's, to me, when I see success, I see people who have stayed with it. I see people who have focused. You and I have had a number. I remember a lunch you and I had a year or two ago, and we talked at length about this need to focus on the one thing, right? And I'm a huge proponent of that idea. When I look at the best in the world at what they do, they didn't become that way by multitasking. They didn't become the best in the world by having 57 things on their to-do list.
That's right.
They became the best in the world because they identified the thing that if they executed consistently and intensely on that thing, it would move the needle.
That's right. Every time.
I think one of the things that the successful people have in common, and this will probably be a little controversial, but I think successful people are playing an internal game. I think the game they're playing is a game of mastery as opposed to a game of winning. There are people who play to win, and I'm okay to that. I'm okay with that. You know, they get an external scoreboard, and a lot of Wall Street plays the game of winning, and obviously you can become hyper successful. But I think there's a different game, which is an inner game, which is the game of mastery, which is how good can I be, and how do I define excellence? And excellence, part of that is certainly money, and part of that is a relationship, and part of that is what kind of leader or mentor you are. But where's the opportunity for mastery? And that to me is an internal game. One of my favorite questions to ask people, Gary, I mean, I'll ask it to you. You won't have to answer it, but maybe the people that are listening to this will answer it for themselves. And the question is this: if I gave you the opportunity to unwind any 3 financial decisions you've ever made, how much money would you now have? And most of us, when we hear that question, we go, holy cow. I mean, I'd have 2, 3, 10 times more money.
Yeah.
If you look at, here's the key. So what that means, the key to getting rich and being successful is to do fewer dumb things. Yeah. If we could just do fewer stupid things, we'd have more success. And so what sabotages us is the things that cause us to be dumb. And that's excessive optimism, unexamined assumptions, and ignoring risk. Every dumb thing I've done has those 3 elements baked into it.
So let's switch gears then. Let's go to our current times, Keith, and let's just talk about that for a second. Right, we're in a pandemic. You and I talked a few months ago about this, and you said, Gary, look, I want you to think of it this way: an asteroid has just hit planet Earth, right? And so now what do we do, right? This isn't a one and done. It's not like the asteroid hit, right? And then the next day we all come out of our houses and go, okay, we get on with our lives, right? This is what's going on right now in the world is a true seismic shift. I had a great business, and all of a sudden, I don't have a great business. Or take real estate specifically, asteroid hits, and all of us are going, oh, wow, we're going to have adversity. And the kind of opposite is happening right now. Literally in this moment, the real estate industry is having record months. The last couple of months, right? There were all these layoffs in March and April, and all of a sudden they're bringing everybody back. Top real estate agents are going, man, I'm a genius, right? I am making hay, right? The sun is shining, right? So I'm just curious. As you hear all of that and think about it, what are your thoughts?
So I think there's an opportunity for people to shift in this environment. And part of that shift is going to be, as you mentioned, well, how do you even make goals and plans? And so to me, I will tell you that the key to any goals and plans is converting those goals and ideas and plans into an executable yellow brick road. So here's what that means. Everybody I know can visualize Oz. They know what they want. The reason they're not at Oz is because they haven't built or executed on the yellow brick road that gets them from Munchkinville to Oz. So people are experts in visualizing the goal. They call their ideas a plan. An idea is not a plan. A plan is executable. A plan is a yellow brick road. A plan says, here's where we are, and here's what we're trying to achieve. And I think the key, Gary, is to pick a game you can win.
Mm-hmm.
Why pick a game you can't win? That's crazy. Crazy people do that
all the time.
Instead you say, okay, here's the game. The game is that it may be a different game than you were playing before, but the game for some people is, how do I remain cash flow neutral for the next 120 between now and year end? Another game might be, how can I make at least $10,000 a month of profit between now and year end? It's how do I pick a game, and then once I picked whatever that goal or idea is, can I build a yellow brick road that gets me from where I am to what I want? And along the way on this yellow brick road, I'm measuring and correcting and executing, and then measuring and correcting and executing so that I'm making progress. Look, if you try to set the same goals and do the same kind of goal setting that you've done in the past, I think you're going to be frustrated. I think instead you say, here's the game that I'm playing in these conditions. So think about football. There have been football games that the weather is perfect, and how you play the game when the environment is perfect is very different than how you play the game if there's 2 inches of ice on the field and it's snowing and the visibility is 5 yards. It's a whole different game. And so you have to decide which game I'm playing in this environment.
That's right.
And now the key is, okay, well, can I build a yellow brick road, an executable plan that gets me from where I am closer to what I want?
Here's what you and I know, and that is the asteroid hit. It is business as unusual. You can cry about it. You can sit on a couch and hope that the good old days return, or you can accept the situation. And by the way, find whatever slivers of joy or happiness that you can find, go find it, right? You're not going to get these days back. If you keep wishing, okay, I just want to go into a bubble and then pop out, well, you're going to be 2 or 3 years down the road, and, you know, you will have missed all of that time together, right? You will have missed all the things that you could have done. So wishing it away is not going to happen, and it's going to actually harm you. But understanding that the world has changed, and the things, the fundamentals that you talked about earlier, are more in play today than ever before, because there's no wiggle room. There's the margin of error today as business people is a lot slimmer in situations like this than in good times. I keep reminding people, Keith, that look, the last decade was the greatest economic recovery in recorded American business history. Don't miss that fact. You've been grazing on high grass. Okay.
That's right.
Now, by the way, we're in trouble. We've got issues. Figure it out, right? Don't go to the couch. Figure it out. Find your way and make peace with the situation you're in. Be as smart as you possibly can, right?
I think that's it. Be smart. Be adaptable, right? Be flexible. Let's be thinking about how can I deliver what customers want, but do it in a different way.
That's it.
And it's the people that are adaptable that are going to win this game.
I wanted to, and we can end on this note. Otherwise, I'll talk all day. I wanted to get a T-shirt that said "Run, Forrest, Run" on it. And the reason is because in my life, and I believe your life too, you and I have seen highs and lows. We've seen really high highs, and we've seen really low lows, and we've seen all in between. And the singular lesson, I believe, that you and I, as human beings, as spouses, as parents, as businessmen, the thing that we've learned is, the sooner you can come to grips with the situation you're in, the sooner you can see the reality. Not optimistic or pessimistic, but just identify it without any energy. This is a situation, and you get up and you start running for whatever opportunity exists, your life will be the best that it can be. If you sit too long in the house, you're going to burn. Get up and start running.
I agree. I think that's very well said. Run, Forrest, run.
Run, Forrest, run. All right, my friend, it was great seeing you. Thank you so much for the time today. You're awesome.
You're going to point to
Enjoyed it. Thank you, Gary. Appreciate you.
All right.
Okay.
That was a great conversation.
Oh my gosh, I loved it. You know what I like is just quickly, we tend to overestimate the short-term effects, and then when we survive it, we then look up and we underestimate the long-term. So be really careful about that. The other thing I loved is he said that the highest level of winners play an inner game, not an outside game, right? They play the game of mastery, not the game of winning. I loved that. And then he ended by saying, don't do stupid things.
No, do fewer dumb things is how we win.
Yeah.
So true. And I remember when he asked us, if you could just take back your 3 worst financial decisions, how much more would you be worth today?
Oh.
When you put it that way, do fewer dumb things, folks.
Yes, I agree. All right, let's get going.
We're going to kick off the lead gen section with a really, really fun one. We've got Eric Broussard. He is doing great stuff on Facebook, and he goes by the handle Mr. Whatever It Takes. And this is just pure fun, folks. Check it out.
Hey everybody, we're back. Jason Abrams, and I'm here with Eric Broussard, Scottsdale, Arizona. Eric, how are you?
Good to be here. Thanks for having me, Jason.
It's an honor to have you here. So let's just get right into it. First of all, congratulations. In getting ready for this thing, I looked back at the last 12 months year to date, and we're talking $1.1 million in GCI as an individual agent. Eric, congratulations on all your success.
Thank you. Thank you.
Okay, so give me a couple of examples. What are some of the different things you do?
So one of the biggest things that I've had a lot of fun with is doing what I call a Mr. Whatever It Takes video. And so I call myself Mr. Whatever It Takes. It's my slogan. It's my thing, and I love it. And I try to create fun and exciting, funny videos that I can send out to clients once every year. And it's a really fun thing because I can send it out and I'm not bragging about how many homes I've sold. I'm not telling them how cool I think I am or how successful we are. I'm just being fun, and it's a cool little tag that I can send out to people once a year, and it gets fun comments, and it's cool.
Well, no, so I've seen a couple of these. First of all, here's what I love about the idea. People do business with people they like. And one of the reasons that you see giant companies running commercials is to move emotionally closer to the consumer. And what you said is, I'm going to make a commercial, not for the masses that I don't know, but for the people that I do know that I'm already in emotional proximity with. In one of them, you're sitting at this restaurant, you get a phone call, they say, we need to do business. You say, good thing I'm Mr. Whatever It Takes, I'll be right there. And then you go and jump out of an airplane to get to their house?
I like to be fun and creative and create this imaginary experience for the client that they're getting Mr. Whatever It Takes.
Well, had you ever skydived before, or was that your first time?
I had gone once, and then I threw on the tuxedo and I got out and I did it.
Oh my
it was
God.
a little bit more tuxedo on.
Well, and then I saw another one where they're like, we need you right away. What kind of car were you driving in that one?
I was in a brand new James Bond Aston Martin. It was incredible.
I mean, you're like, the next thing I know, you're like dodging and weaving at 100 miles an hour in this James Bond car to fly into and you jumped over the car. I found myself laughing the whole time I was watching it.
Yeah, that was the point.
So when you sent that out to your people via text, and then you put that on Facebook for your network, and you used command to do it because you targeted the people that were in your data bank through the Facebook campaign, which was that. I love all of that. What were some of the comments you were getting back from the people in your SOI when they watched it?
This is so creative, so much. I mean, I don't know how to answer that, Jason.
Well, let me ask you a different way. You send out these awesome videos, you use Facebook to do it. You had to have gotten feedback. Like, how do you know what you did worked? Let me ask you this. If I sent out a just sold card to everyone in my data bank, I don't know that anyone would call and say anything to me. Did you get phone calls and text messages?
That's the difference. So I got text messages, I got calls, and I got tons of Facebook comments, which is the best part about it, because I knew it was getting looked at, I knew it was getting seen, and I knew it was getting good feedback because I was getting good texts and calls back about it.
I love that. So then COVID hits. And you look up and you decide you now got to try some different things. And you did a few really unique touches. Tell us about one of them.
So the first one I did was Eric's top 10 movies, because I don't know if you're anything like me, I'm sure you are, but we were watching a ton of movies here at this house. So we had Netflix on, we had, all these different shows we were watching, and I just made a list of my top 10 favorite movies that I watched and my top 10 shows. We created a nice, cool pamphlet flyer. I put together a popcorn delivery with Cracker Jacks and snacks, and I went and I physically dropped it off at all my clients' houses. They loved it. It was probably the most successful SOI event that I did, even more so than the videos.
And you did it in a really responsible way, meaning you left it on the porch and then stepped back. So you did social distancing, but you gave them an experience. What I'm hearing from you is, Jason, I'm done making touches. I'm now delivering experiences. And that's what Mr. Whatever It Takes is.
Yep. The other one that I did last year, which was also really successful, this was before COVID hit. This was for Thanksgiving. I hand delivered 127 pies to every one of my clients, either houses or offices, in my tuxedo.
But the thing that I saw that you did that was cool was you showed up in a tuxedo and then you took a picture of you with your customer. They then were posting those all over Facebook.
That was part of the gig. So I created another flyer. I think flyers are important. And I told them what I wanted out of the experience. Hey, post your photo on Facebook, tag me, and you're gonna get put into a raffle if you do so. So it gave them an incentive, and then I have prizes for the first 3 winners based on, the best picture. And then I had them sending it out all over their Facebook page to all their friends and tagging me, which was free publicity. It was awesome.
I love it, man. Hey, Eric, Gary Keller says that for the love of real estate, and he says this is the greatest industry in the world. And it seems like it's changing your life. I'd love to get your thoughts on it. If it wasn't for residential real estate and Keller Williams, what do you think you'd be doing today?
I don't have I don't know.
That's the
I
thing.
love this.
That's the thing about this. So many of us fail into it in one form or another, and then you get here and we realize that we're in the greatest industry in the world and we're all living our best lives. And I think your story is the Keller Williams story. Thanks for being here.
Thanks, Jason.
All right. Well, that was fun. I mean, Eric, the thing that if you didn't gather, like if you saw his stats, here's someone who's 26 years old. He's actually been in real estate for 4 years.
Yes.
And last year he did
4
like
years.
4 years.
Yeah.
Like you think what is he going to look like in 5 more? But he did like $500,000 in GCI last year.
Yeah.
As a solo agent.
Yeah.
Really incredible trajectory, and I think on a 12-month run, it was closer to $1 million in GCI. It's just ramping up.
Yeah. Well, what I loved about, and if you got the links, go watch the videos.
Yeah.
The videos are awesome. But here's what I like: whatever it takes. There was a book written by Mike Hernecki about that, right? And he said the secret to getting everything you want is being willing to do whatever it takes. The other thing that I loved is that Eric makes it fun.
Yes.
All right, let's switch gears. So we have Kimberly Meserve up, and she's going to talk to us about buyer events. All right, let's dive into this. So you've made events a big part of your business. First, can you tell us why you did that?
I moved to the Boston area and I didn't know anybody at all when I moved here. So I started doing these first-time homebuyer seminars and I saw an opportunity to improve on it every single time. So it's become a cornerstone of my business.
Give us the quick explanation for how you did events prior to March.
Anybody who has spent any time in New England in the winter knows that we have very long winters and they're cold. And as soon as it's nice, everybody's just like, I want to be outside. So I had an event that was supposed to be at my office and it fell on that nice, first night day and no one showed up. So I kind of thought where would younger people want to go on a Saturday? So we started hosting them at a local brewery. And, we usually get about
Time out. I heard Jay go,
That's winning, right? Brews and buyers. I like it.
Yeah. That's Jay's thing. Sorry, go ahead.
Yeah, so it actually became an event. I named it after the brewery, the brewery theme. So I created this event. It's called Brews and Buying First Time Homebuyer Workshop.
Yeah, I love that. So how did you do it?
Yeah, so we partnered with a local brewery. My lender and I split the cost. So I paid for the advertising and then my lender would pay for the costs that we had with the brewery. And it ended up being about 50-50. So one thing I discovered through the process is also people really don't enjoy looking at PowerPoints. That's a great way to lose someone's attention. So we actually created a workbook of every single thing that we go through. There's a lot of fill in the blank parts, areas for them to take their notes, and it's all branded to us. So even if they're not ready to take action today, even if it's 6 months, 12 months down the road, they're going to go back and they're going to look at their notes and they're also going to see all my contact information there, that's not a substitute for any type of follow-up, but it's just a supplement. And so they would show up and we would go through, we'd have kind of just an open forum conversation going through the entire process. You're here today. What do you need to know? And how do you get started? And they would also get a free beer. So it ended up being also beneficial for the brewery because people would stay and hang out afterwards, have another drink, play some games. And we kind of formed this co-marketing relationship as well.
Okay, I got to ask a question. Number one, did you have to buy the beer or did the brewery provide the beer?
We had a minimum bar tab. So we had to spend a certain amount of money in order to use the private space that they had. So we gave everybody like one free beer, and then if there was any excess at the end that we had to get to the tab, we would either like get some free T-shirts and give them out as giveaways, or we would give them another.
So the second question, and that is, what's the legal implication of having a buyer seminar and giving everybody a beer?
That's a good question. So, I mean, the brewery kind of holds most of the responsibility.
Okay, well, that's what I thought.
I noticed that a lot of people still show up that wouldn't drink at all. They would get like a soda. So I think just having that like casual, easy environment that was not as intimidating as a real estate office was the differentiator.
Let's go to now COVID. What happened?
Yeah, so this is such a big foundation of my lead gen, so I couldn't stop doing it. I have my whole goal for the year planned around how many events I'll have. So we decided to just pivot and do it on Zoom. The first one was a little iffy, just trying to figure out how to make everything work. But what we're doing now is the whole actual advertising process is identical. We're sending people to an Eventbrite page, which is something we've done all along. The Eventbrite page just is a more detailed information on the event that you can't fit all that in a Facebook ad. I also have like testimonials and other stuff in there as well. So with the Eventbrite, we're capturing their name, their email, and their phone number. And there is also an option for them to make a small donation to the Animal Rescue League. That I really like, because that shows me who the serious people are if they're willing to pay $5 to attend when there's an option for free. So once we get everybody, about a day before the event, I'll go through and I will text everybody to confirm. I like to create scarcity. So I'll say like, we only have limited seats. Please respond yes if you will be attending. So that gives me an idea of how many people will be attending. And then we send out a link to Zoom along with the PDF of the workbook that they were getting pre-COVID. So when it comes to the day of the event, we're just jumping on a Zoom call. The whole thing is the same, except just the only difference is we've really had to be purposeful about encouraging engagement and getting people to turn their cameras on, type in the chat box if they have any questions, unmute yourself if you have any questions. And we have prompts built along the way where we will just sit there in silence until someone actually says something and gets the engagement flowing. Now,
question, and that is the setting that we're seeing right now, is this the Zoom setting that you use for these events now, or do you go to something else?
This is just in my house. Our office has been closed for a very long time, so I just do it in my house. Everybody else is in their house, so no need for me to not be.
Okay. So it's right there. So this is exactly what they see.
So if I heard you right, Kimberly, the day before, you're sending them a text message to confirm. So people have to give you their mobile number to register. That's a part of the process?
Yes.
Is that something you learned, or is that something that you knew right off the bat?
That's something I learned. I didn't start doing that until about December of 2019. I was always hesitant. I figured that people wouldn't want to give their mobile number and I would get a lower amount of registrations. And then I just tried and it worked really well.
That's great. Well, it's good to hear, because I think a lot of people are hesitant to ask for that, but that is the ideal way to follow up and confirm.
That's right.
My dentist does it now. Everybody does it. So I'm kind of used to getting, like, Best Buy says your package is ready to be, picked up, whatever that is. So I love that.
Yeah. And I've been able to do some really cool things through Command with it as well. So I set up a Zap with Zapier where you can trigger that if I get a new Eventbrite lead, it will automatically go into Command. And then I can see that's the only lead source I have flowing into Command right now. So it's very easy for me to just see like new leads, and I know that it's coming from Eventbrite without having to do too much digging. So then when people come in now before the event, like it could be 2 weeks out, they'll get tagged and then they'll get set up on a smart plan. So in that smart plan, they get a text that has a video that I just uploaded to YouTube. And it's pretty much just like, hey, thanks so much for registering. I just wanted to put a face to the name. We're really looking forward to having you on our next event. If you have any questions in the meantime, you can text me at this number.
How do I drive people to join my event?
Yeah, it's all Facebook targeting. That's really the only thing I've been doing. At this point, because I've been doing it so long, I've created brand awareness with the event. And so I have a little bit on Instagram as well and other social media platforms, but the majority is driven through Facebook ads. So it's just a super simple Facebook ad. Hey, are you looking to buy a home? Come find out about the special financing options available to first-time buyers. And it's a link to the Eventbrite page. So then they go to Eventbrite, they can register on there, and we have that whole pre-event check-in system.
If you're going to get, are you still getting 25 to 40 people to your virtual events?
Yeah, so the interesting thing that's happened is we're at like 25 to 30 in person. We're really closer to 20 now virtually. However, my conversion rate in person was a little bit lower, and my conversion rate virtually has actually gone up.
Oh, okay. I was just curious, like, should I expect to spend $20 on Facebook advertising to get 20 people in my virtual event? Or is it more like what's the investment? And at a 20% conversion rate, you kind of can start figuring out the math on your return.
Yeah, I spend based on the potential reach of the area. So when you go in and you put your different targeting, like you can target for first-time buyers, right. You can target for other real estate-related interests, and then it will tell you your potential reach. So my potential reach is usually around like 42,000 because I'm in a city. So I base my budget off of the targeting. So I usually spend about $400 to $500 per event. So the rule of thumb that I've gone by is you want to take like the first few numbers. So if you had a reach of 20,000 people, you would spend $200 for the life of the ad. If you have a reach of 40,000 people, you'll spend $400.
Okay, so it's just simple division there. That'll give you a sense of what you need to spend and what you get. And you said that you're getting better than 20% conversion from the event?
Yep, I have a 20% conversion right now.
And your average commission is?
About $12,000.
So that's a pretty good return on a $400 investment.
Yeah, it's a really good return on a $400,000 investment.
All right, Kimberly, thank you. We're going to let you go. We really appreciate you. Thank you for sharing.
You're welcome. Thank you.
Awesome. All right, Kimberly, that was really great. My ahas, Jay, were number one, events with a purpose. And she's very purposeful, right? This was very well thought through, and she made a superb pivot from doing it live in person to doing it live, right, through Zoom. The other thing is just like Eric, she found the fun. Yeah. You can tell she has fun, she enjoys it, but she's also found the fun for her people, right? Bruising buyers. Nothing better than that, man.
And you, some of you are experiencing it right on this platform. She's asking them to engage. Yeah. And so getting them involved really changes the nature of the experience because it goes from passive to active. I thought that was just so smart. Yeah, and I couldn't do it in real time, but that $400 investment was $48,000 in commissions when you add it up. That is a great rate of return on events.
Oh, yeah.
All right, so next up, we've got another event. We've got Sven Anderson, and he's doing client webinars that convert. And some of the stuff he shares with us just actually blew my socks off.
Well, he and Kimberly are bookends, right? He actually discovered how to really scale doing it online. So that's what was interesting about that. Let's roll that.
Yep.
So let's dive right into this. We want to talk about events. So if you would tell us your thoughts and approach to events to build your business.
I'm all about trying to figure out how to stay connected to my clients, and that's the biggest thing. I say to everybody when I walk in the door, if you don't recommend us to 2 to 3 other clients, then we're not going to be doing the right job for you. So I need to stay connected to people all over the place. My name, of course, is Sven. So things like the Frozen 2 event, which we did with a reindeer named Sven, and everybody gets a reindeer. Those little things make a difference for all the kids.
So for you, it's about connect. That's what you're telling Jay. So let's talk prior to this pandemic. We're all moving around freely and we're interacting. Tell us your strategy around events when people could get together.
What we used to do for events was in-person buyer and seller seminars where we would host downsizers, which is a downsizing seminar, which was one of the biggest return on investments for us. And we'd actually rent out the top floor of a restaurant right around the corner from us and screen, video projection, and speakers, myself, a mortgage professional, an attorney, and a lender, and as well as a accountant. So it was awesome.
How did you get people there?
We did a lot with focusing on where they were spending their time and effort, and they were focusing their time and looking at the newspaper. So we focus on the newspaper, but we do direct mail to them too. So we do a postcard and we say, hey, we're having this event, and we schedule, pick up the phone, and they would register online or pick up the phone and call.
And how many people would you have show up to a standard event?
We'd have 30 to 40 parties.
And I just, I'm stuck on it. It's 2020, and you just said that one of the prime drivers for attendance was a newspaper ad. And I think there's a lot of people who thought, what, that still happens?
Well, so Jay, what I found is that, where do most people at a certain age category look? So I wasn't targeting a first-time home buyer because they're not in my market area typically. But what I would do is I would target to specific vertical, and we'd do specific mailings to them time after time. It was a direct mail piece talking about the event and or what's the market like, as well as basically a newspaper ad. So a combination of that with the direct mail. And we've actually now incorporated QR codes on it. So we just tell people how to use it. They click on the QR code and can register right from the mailer.
So no social media. You went right to the paper.
And direct mail.
No,
Direct mail.
We're doing a ton of social media now because we moved away from that. We still do that, but we've also done Instagram and Facebook.
Okay, so you've evolved this, particularly during the pandemic, to expand your reach to your audience.
We were doing these every month. So we started doing a seminar series where we do a buyer series, we do a downsizing series, and we do a move up series as well as an investor series.
Wow.
And I did these at this event, and this venue was closed, so I couldn't go there. I'm like, what am I going to do? This is a major source of business for us.
So I heard 4 different seminars. So was that 4 different events a month?
Yes.
Okay, got it.
And there were different verticals. So we created different vertical seminars for different people. And what we found was that we were trying to do a downsizing seminar, and first-time homebuyers would show up and be like, oh, this isn't really the right fit. So
That's right.
We had to mix it. We had to switch it. And what we found is that when we did downsizing seminars and we were very specifically focused in that niche, the return on investment was greater.
So what was your conversion rate pre-COVID? If you had 20 people, 30 people show up, what happened?
So we'd probably convert 30% of those people in the room.
Wow.
And because here's the situation, I'd start the seminar and say, I'm not selling anything here. If this is an educational purposes only, I hate to be sold something. I just don't want to do that. So I started the seminar saying, if you get something out of this, this is a win for me. So please it's an open dialogue, please engage. And I need you to make sure that you know that you're not going to be asked for anything at the end of the seminar.
So now fast forward, all of a sudden the pandemic happens, restaurants closed. You can't use that wonderful facility. Okay, tell us what happened.
I went to my ops manager and I said, what are we going to do? I challenged him. I said, we need to find some kind of online tool that will allow us to do just this. And more importantly, I don't want to do seminars twice. I've got 3 kids and my wife and a dog. And I'm like, I want to go home at night. I don't want to do this. So I said, hey, find me a product that will help us with this. So we actually implemented a product. And what we did was we did one seminar live via like a Zoom it's called Webinar Jam, and this tool we use allows us to do a webinar. We do it one time. We created it one time with different vendors, and then we launch it and we run it every week. So we have 2 webinars a week, and I'm never on them. And somebody's just in the chat watching the chat, and we're generating 20 to 30 leads a week, real leads, because they're not tire kickers. They're coming to this event and register.
So, or do people think they're attending a live event, or do they know it's a recording?
Oh no, it's live. This is because we market it as such, Jay. We actually say this is our live event. You need to register, and we put a timer on it so that you need to register for an event at a certain time, or else it's going to sell out. So you need to be able to do that. So we do that for different events, and we split them up every week.
But it's recorded.
It is. And somebody's live in the chat box. One of my team and my ops managers typically live on Tuesdays and Thursday nights is what we do. We run them from 6 to 8, which we say we're registered. We never stay that long. But what's cool is once I did it live, there'd be real things talking to them. I'd be talking to somebody like, hey, Jay, hey, Gary, just make sure you put in the chat box over there that you can hear me okay, right? So you would and everybody would say, hey, can everybody else hear me? And they'd go in the chat box and yeah, we're live. So it was live, but it wasn't. So, and everybody, and what I would do is I chat, somebody else would log in as me and chat back to them on the chat box. Got it. And any questions would be answered. Like, oh, here's the question. Let's answer that.
Wow.
So
I love
amazing
that.
leverage.
I love that.
So it's a live experience for them. You're giving them live service and support, but you're leveraged in that you have to do it. You do it once a month, so it's up to date, but you don't have to do it twice a week is when you're offering it.
No, Jay, I want to make sure I'm very clear about it. I did it once for each event. I did it 4 times and I never do it again.
Wow.
That's it.
You would only go back and redo it if it had to be updated because the market changed or something else. And there's COVID language in the first couple of webinars that I did. And so when that changes, if it does shift, then I'm going to go back and redo it, talk about market, because I don't talk about market stats in it at the time. And if somebody wants to do that, we talk later. So it's very, very specifically generic enough so that I can get away with it. And it's been running and we're just generating revenue from it. And what's cool about it is the whole process in the front end that gets them to a landing page that then takes them, and it looks like it's a true landing page within the tool. It gets them to register, it puts them into a spreadsheet via Zapier, and then drops into Boomtown directly. So then, or it could drop them into Command, which we're looking to do next.
Yeah, got it. So, okay, so we're really curious about the product you're using. Can you tell us a little about that?
Sure. So I'm using a tool called Webinar Jam. So Webinar Jam, and there's another tool called, it's a sister tool called Ever Webinar. So Webinar Jam allows you to shoot the webinar. It launches it. I have I guess it's $6.99 a year, 4 presenters, unlimited webinars, up to 2,000 attendees. And then Ever Webinar allows you to play it over and over again. So all in expense, $1,200 for the whole package for the year.
Wow. Got it. Okay. So where do you record where did you record these? Did you go back? Did you do it in front of a live group? No.
Right here.
Okay. Okay. So that's it. You're standing right there.
It doesn't have to be hard. I mean, we're doing it here, and they're all on Zoom. So my other speakers are just on Zoom. So it looks like we're doing it virtually. I mean, we're doing it virtually. They're doing it in their houses.
If someone asks a question on one of your recorded live seminars that really for your accountant or your attorney, does your ops manager say, great, I'm going to get with them after this and get an answer back to you?
Exactly.
Okay.
Exactly, because in the chat, everybody, you can have it sent just to you, Jay, or just to everybody. So if you send that back and it's in the chat for everybody, it just says, oh, I'll get you an answer back tomorrow.
All right, man. This has been fun.
Take care, guys.
Thank you.
Yeah. Bye-bye. Yeah. So he literally mastered scaling online events, right?
Yeah.
Yeah. So he has 4 different events. He's doing those twice a week. Jeepers. I found it funny. He mastered the recorded live event.
Which is kind of what we're doing right now.
Which is kind of what we're doing right now. That's exactly right, except in his case, we are the admin people doing it. The other thing, I don't know if anyone caught, but he's doing fewer people per seminar, but his conversion rate is even higher.
30% is what I picked up from that. And I love that one of the driving factors for why he pivoted, you were talking about getting in touch with your values this morning. He wants to spend time with his family, but he wasn't willing to let that limit the potential for his business. So they found a creative solution to give him more time with his family and more business.
You know, it got cut out of the interview we played, but Kimberly made the same comment that in the longer interview about it beginning to explore a live recorded version as well.
That's right. That's right. And moving it, she'd always done it on Sundays, but now she knows she doesn't have to.
That's right.
I love it. All right, so next up, we've got a great interview with Mary Cheatham King, and it's like, we called it marketing magic. She is tremendous at leveraging her community to make her marketing really pop for her consumers and her clients. Magazine magic. There we go. It's a fun interview, and it runs about 15 minutes, and after that, we're going to lunch. Folks into the break.
Yep. So Mary Cheatham, let's dive into this. So your superpower is marketing. And you were sharing with us a little of your thoughts about that. So just dive in and talk to us just for a minute about marketing itself.
Okay. So, Gary and Jay, I think that what we all understand as real estate brokers is that it's our job to sell our clients' homes, right? And that's really kind of where my passion for marketing started, which is that, I could sense early on and could see that, what you want to do is really set your clients' listings apart from everyone else's with some staging and some thoughts, some prep, professional photos when other people weren't doing those types of things. So then from there, it grows into how do you market your business, which is really interesting. I think what agents can forget sometimes is that you want to market your listings and you want to market yourself as a fiduciary, right? Remember that you're the guide. You are not the hero of the story, right? Your clients are the hero of the story.
Right.
But you also, I think, want to make sure that you're bringing a community piece into it. Because at any point in time when you are communicating with people consistently, as we all know we should be, a lot of them aren't in the market to buy or sell at that point in time. So what keeps them interested in what you have to say? So
do I hear you saying that in your mind, you've kind of compartmentalized marketing into marketing the property, marketing the community, and marketing yourself?
I think that's exactly right, Gary. And as a matter of fact, so our marketing team is incredible. They're in-house. They are young whippersnappers who know how to do all kinds of design things and algorithms, and I don't even know, but they handle it. So we have these big idea meetings, which are so fun, and then they make it happen, which is incredible. And what we always talk about is, one of them is really in charge of marketing our listings and keeping our sellers apprised of here's what we're doing. And we have a series of emails that go out to our sellers, keeping them posted. So let's compartmentalize this conversation real quickly. And that is, you're going there with listings, but let's put a dot on that and say, okay, let's talk about marketing listings, then we'll go to community, and then we'll talk about marketing you. Is that fair enough? I think that's great. But I think the piece I want to clarify for you, Gary, is that to me, marketing us is the umbrella that's over marketing our listings and the community, if that makes sense. It does. That's what makes us who we are. So there's really two parts as I see it. Okay. Which is, it's using our listings and using our spotlight that we shine on our community to market ourselves. Okay. I love that a lot. All right. So take off and tell us how you do that. The way we do that, of course, has pivoted some during COVID. But the biggest thing is, people don't really care that much about you and what you're doing. And it's got to all be about what's around you and being a guide, both to the process of buying and selling, and to your community. So that's something that we really focus on. We have a magazine that we do, which is very community focused. We send weekly emails, which are almost like mini magazines, right? They've got content in them. We're huge on creating original content, and then you got to squeeze it like crazy to get every ounce of leverage you can out of that content you create. Okay.
Harry Cheatham, that first piece, who's getting these things? You have a magazine, you have these emails, there's like a newsletter, who are they going to?
Okay, great question. So we have a database of about 12,000 people. We send the magazine to about 6,000 people, and the emails go to about 10. So, of course, the magazine is, as you can imagine, very labor intensive. That's all done in-house. Our incredible marketing director, Meg, puts that together. And we have, members of our team that help contribute to that. Landy's an incredible writer. Andy helps with it. We all come together, and it's articles that are about. We'll link this through for you guys so you can see it. You can see what it is. But it's articles about new businesses in our community. We have sponsors who, they don't look like sponsors, y'all. It's articles about what these businesses do and how they give back. Then we choose bright lights in our community. Or this last one that we did, we put together an ice cream sandwich guide where we did kind of out of the box ice cream sandwich combinations that you can make at home, but all the ice cream flavors came from local ice cream shops. So it's things like that. So some of them are really deep, and it's about, we had Florence here. It's about rebuilding from Florence. It's about things that are really important, but it's also some light things and redirecting people to community resources. So can you hold up the magazine real quick? Oh, yeah. Okay. Well, what I really want to show you is that this was our first magazine.
Okay.
Which is a piece of computer paper. This is the whole thing.
So that's what it was originally. Got it.
Yeah.
Right. So this is where we started about 5 years ago.
Okay.
And then this is our most recent one with
nice.
our team at one of our local ice cream shops.
So, so just a couple of housekeeping questions. Number one, what does it cost to produce that?
So the magazine is about $6,000 to send out, and we do have sponsors. And so just so you kind of have an idea.
So that's
like,
to send out or to produce? So is the $6,000 to make it and send it, or it's $6,000 to send it?
That's total. That's total. But remember, Gary, that doesn't include the cost of the photography. A lot of that we already have from our listings. It doesn't include, we write the articles in house. We come up with the ideas in house. Meg shoots the flat lays, all that.
So all in, if you had to put a dollar amount on all of that, what do you think it is? From 6,000 to what?
I would say maybe 10 would be a reasonable number.
Yeah, that sounds about
and
right.
We send it 4 times a year.
Okay. And it goes to 6,000 people.
That's right.
And how do you choose the 6,000?
So we send it to all of our past clients. We send it to, folks that are in our spheres, that sort of thing. But we started a process a while ago of basically farming neighborhoods where we choose areas. We live in a waterfront area, so we've pulled every waterfront home within certain parameters, and we mail not to their local address, but to their home address. We have a lot of second homeowners. And then we started working through other communities. So basically, it's just kind of a labor-intensive process, and we go through the tax records every month. We have someone that does that from home for us, where she'll go through and update those records.
I love that. Okay. And how many, I'm just real quickly, how many pages is that?
Okay, so our newsletter is now about 20 pages.
Okay.
We'll do 24 pages for our holiday edition because we do a gift guide. So we do it's all local stuff. We go around to local stores and have them pick their favorite things, and we talk about those.
So I have a question then, and that is, okay, I'm doing this magazine, and it looks lovely, by the way, and it's 6 times a year. How does business come from that? Does someone go, hey, I got your magazine and I want to list my home, or hey, I got your magazine and I want to buy some? What?
Is there a call to action in there?
Yeah, tell us how.
Get them to make your phone ring.
Yeah, how does this turn into business? Is what I want to.
Great question. So the first few pages of the magazine, there's a letter from me, the beginning of the magazine. There's a lot of kind of call to action on that page. We talk a lot about the purpose of the magazine, guys. Let's be clear. Purpose of the magazine is to take mind share, which leads to market share, and also to get listings. That is what we want is listings. So a lot of it is about, listing inventory is low. Here's how much more homes you're selling for. We always include graphs and charts and those types of things. So yes, it's full of calls to action. And actually, guys, when the magazine is in mailboxes, and we also deliver it to local businesses. So we have them all over town at local small businesses. And, when those arrive, there's definitely an influx of calls that come in. But then they stick around. I mean, I think people really enjoy reading them. They seem to, which I'm so grateful for. I'm so proud of these guys on our team that put these together. And I think they have kind of a long shelf life. And so people go back to them. Not to mention, the other way I think, y'all, is that we generate a lot of goodwill because we're genuinely trying to help other small businesses and shining a light on people who are doing good in our community. And I think people appreciate that and see that we really are trying to make it better for everybody, and that we position ourselves as somebody that they'd want to work with. Gary, you mentioned earlier 6 a year. We have gone through years when we've done more. We've been doing this for about 4 years, but we're actually going to do four really good, solid. And we don't call it a newsletter anymore. It's a magazine.
Yeah. So you mentioned emails. Let's jump to that then for a second. So we have the magazine. Okay. It's now going to be 4 times a year, and we're going to email. Talk to us about that. What's the effectiveness of your emails?
Yeah. So one of the things I'll say about the email is that we start by, of course, we have tons of original content in this magazine.
Right.
So we start by, I can't stress this enough, when you create original content, you've got to chunk it down into pieces and reuse it. So these articles are then Facebook posts, right, where we ask the small business that we featured to share it as well. We include it in the emails. I mean, that is probably one of our biggest marketing challenges, is wringing every ounce of leverage out of these pieces of content that we put together.
I love that. I love that.
When the magazine first goes out, for the first, I mean, I would say the next 4 or 5 emails that go out, we have links through to these articles, and we include all this content that we've done, because what we find, of course, is that we have a lot more email addresses than we do physical addresses, than we do, complete profiles that are in our database, which we're going to mail.
Right.
And so it's also different folks who are looking in those emails. I think that anybody who is getting into the business and trying to think about how to market, I think people think that they need to talk all the time about, I'm Mary Cheatham King, realtor, and these are my listings. Yeah. And, and I think that the more you can shine a spotlight back on people in your community.
That's right.
And again, be a guide, be the person, hey, here are the best picks from these, look, here's what I ate at this restaurant. Here's what, I think all those things, and not being afraid to use video to do it, I think is one of my biggest takeaways.
You were dancing a little bit. I was making sure.
I'm dancing. I'm just dancing because I'm going, we wrote about this in the Millionaire Real Estate Agent. We wrote about positioning, right? The battle for mind share. Mm-hmm. And you went right to it, because mind share leads to market share. And people forget that. Now, that is playing the long game. Mind share is not an overnight success concept. Mind share is, I'm building a business worth owning that has long legs to it, right?
I think that's exactly right. And gosh, isn't that what we're all doing?
If someone wanted to take your plan and run with it, like, you know what, we're going to do a quarterly magazine. We're going to use that content to create newsletters. We're going to populate with videos. We're going to shine a spotlight on our community and how we wrap it all together. What would be the reasonable expectation for when will I start to see results from those efforts? Because this is like a time kind of farming. And a lot of times people quit farming. Right there on the verge of getting results, right?
No, she said it is.
Yeah. You know what I would say? I think you can expect to get results immediately. And I'll tell you the piece of strategy that I would say is, if you're going to focus on local businesses, start by figuring out certainly local businesses that need your help, but also think about local businesses that already have a big following, and go to those folks first and make sure that you're including them, and then ask them to share across the content that you create.
I love that.
Because I think that's the beauty of this all. Is that there's just no limit. And not to mention, you're building goodwill in your community when you're doing this. So immediately, I can't tell you how often we've had somebody say, "Oh, you did this piece about our business, or you chose some of our items for your gift guide, and now my daughter needs to sell her house."
Now, our last question, and that is, from a cost standpoint, so your articles are essentially sponsored content, right? And I assume that they're paying for that. So when you look at the cost, let's say we're $10,000 all in, how much of that do you recoup from people that contribute to the cost?
I would say we recoup more than half of that typically. And the key is that we actually have our sponsors, the sponsors that we ask to help us, we have them write their checks directly to the print house. So we don't run that through our books, which really works well for us. And it also, to me, it helps us to say to them, hey guys, we just want the story about you to reach more people.
That's right. Because
it's true.
That's right.
We're just trying to defray the cost, which is a win-win for everybody.
Yeah, I love that. I love that. All right, dear, we'll let you go. It's a pleasure to see you, and thank you for giving so freely of your time and your thoughts. We really appreciate it.
My pleasure. My pleasure. Awesome. Thank you guys for having me.
So that was fun listening to Elizabeth Perkins. Just kidding, by the way. But I went over to Jay while we were watching this and went, man, she reminds me of one of my favorite actresses, Elizabeth Perkins. That was awesome. What I loved is the focus on community. Mm-hmm. I love the fact that she is going out and finding businesses that have a following, and then treating articles as truly sponsored content. Mm-hmm. Yep. Yeah.
And the focus on community rather than just the straight up real estate. She's actually curating information that people really want to know.
That's right.
Which makes that magazine something they look forward to and get great value from.
Yeah, and they're learning a lot about their community, which is a big deal. Yeah.
So folks, I guess you're getting it now. Hopefully you're really enjoying this experience. We've tried to share just a handful of really great ones to start, and we're about to go into our lunch break.
We are.
So you get 30 minutes to make a sandwich, to go through your notes, circle your favorite ahas, maybe share them in the chat. And who do we get to enjoy on the break? One of your favorite musicians.
Yeah, a good friend of mine, and definitely one of my favorite musicians, Rob Baird. we filmed him at the Saxon Pub. So, Rob, so even if you go get your lunch, turn
the volume up.
Yeah, turn the volume up. Yep, and we'll see you in 30 minutes.
Keller Williams Mega Camp. Hope you're enjoying everything as we're moving along. My name is Rob Baird. Good to be back with you. I played the welcome party yesterday. We're at the Saxon Pub here in Austin, Texas. Established in 1990. I started playing here when I was about 22 years old. And honestly, very good to be back in the room. So I'm a songwriter originally from Memphis, Tennessee. Been living in Austin since 2009. And I would say this is my home venue. And it's really a pleasure to be able to play some songs for you right now. Hell with this, you had it coming. I'm heading back where I came, over them hills and over them mountains. And if I could, I never would change. Give me back my